Welcome to Upside for the real stories behind the headlines affecting European venture. Joining today is Lomax from Outsized, Mads and myself from SuperSeed, and today we have a very special guest. We've got Chris Elphick from the BVCA. For those who don't know the British Venture Capital Association, it's the voice of VC and has been around for over 40 years. They support people like us in private markets with events, training, networking, research, and being the voice of VC in government. Chris is the new head of venture capital, has been with them for 9 years, prior to this role working in research policy and across government. Gents, how have your weeks been? Chris, thank you so much for joining us. How are you and what's been on your mind this week?
Hi, thanks, Dan. Yeah, so it's been another busy week. We're gearing up. We have our big VC conference next week, so just getting all that lined up. We've had FinTech Week, lots of engagement with government across that. Going into April, May, June is sort of mad events VC conference season. So that's now started and probably won't stop until we get to the summer. So we've only been working through that.
What goes on? I mean, what goes on if you're a founder listening to this? What goes on at a VC conference with the BVCA? What do you talk about? Who's twiddling moustaches and what are the dirty secrets? What's the agenda?
So for this one, we do we have it's largely GP, so VC focused, but we have founders there as well. It's lots of panels of VCs, sort of lots of VC navel gazing. What's the future of the industry? What impact is AI having on it? But we also have Peter Kyle, the Secretary of State for Science, Innovation and Technology, coming along talking to our VC audience.
He must have kept it. He kept a seat. Right?
He did, yes. No, he's Hove. I used to live near his constituency, and he's one of those sort of red pockets you get on the south coast. There's a few more of them now since the last election. But yeah, no. So he's now the Secretary of State, and is very big on AI and bringing it into government and having a government chat bot and stuff like that. I famously used ChatGPT, which he got a lot of criticism for, a bit unfairly, I think. So we've got him.
What did he do? What did he use it for?
He was just using it for, basic government. But I think, good
some
on
people
him.
put there was a freedom of information access request to the prompts that he put into ChatGPT, which, to be honest, if anyone looked at my prompts into ChatGPT, I'd probably be embarrassed.
Yeah.
Poor dude.
Sorry. Yeah, it's a bit of a double, because you kind of want your MPs and your reps to understand the latest tech and understand business and understand all of the connective tissue that connects it. So you kind of want them to be using all these tools, not to be chastised for it. Really interesting.
I agree. And he has so many things to cover, and sometimes some high level questions just to give him some prompts will be very useful. So I think he was a bit harshly judged on that.
I don't think we need freedom of information and access to the prompts that all of the MPs put into ChatGPT. I really don't think we need that. And the amount of hours that people need to put to responding to those freedom of information access requests, right? That's ridiculous.
No.
As someone who used to work for an MP, I very, very hard agree on that.
Would you ever become an MP?
I think I, worked in Parliament when I was early 20s, and going into it thinking, I'd love to be an MP, and like many left thinking, God, I would never want to be an MP. just given the, especially now, the increased scrutiny. I mean, I was there 13 years ago when you used to have, for the first time, you had sort of computer generated campaigns where I'd get like 200 of the identical email from these various campaigning organisations, and have to respond to every single one. The sheer number of work just as a case worker when you're working for an MP, all these things is now just so off the scale, and the aggression and everything else that you have to put up with is just it's a lot more difficult than it used to be. So it's not an easy gig, that's for sure.
I'll tell you that as a no. It's a bloody thankless task.
Indeed.
But we need, I don't know how we then, we're going super off topic here, but bear with me. But I don't know how we then create the environment for the right people that we want representing us to do their jobs. I mean, we've got to allow. I don't know how. Otherwise, we're going to get caught in this loop where people.
I won't go too much. I mean, I used to work for a Liberal Democrat, so electoral reform and all this stuff is certainly something that I used to be very big on. I mean, the salary is not competitive in global terms, should we say, in terms of what MPs earn. So how you solve all of that kind of needs to be depoliticized.
I think we should pay them all a lot more money. I would remove the concept of expenses. I would add in different bands from depending on how far you live away from Westminster, and you just get a flat rate and you do with it. So we don't even get into any of that nonsense, and you make it an attractive proposition for people to want to go and do.
And maybe forgive them if they smoked a joint at university.
Well, that's the court of public opinion. I don't think you're able to ever to change that. But yes.
Yeah. I mean,
there was a Tory MP who said someone put something illegal in his pipe when he was at Oxford, so that's
there you go. and
they always try and find an excuse.
He didn't inhale either. I bet.
Exactly.
Oh, just let them be humans.
I thought Boris Johnson, what he said, he may have fallen into some cocaine or something once.
Someone sneezed next to him. Yeah.
Chris, you also we were talking about what's been happening this week. So this week there have been some local and some mayoral elections. I know that you have some thoughts about what's been happening there.
Yeah, so I mean, this is recording this Friday morning, so we don't have everything, but there was the Runcorn by-election, which was won by Reform by 6 votes. Made me think again, feel sorry for the local Labour campaign team there, who will just be thinking, God, if we, a handful of people through the door, we would have held on to the seat. So I very much feel for them in that sense. But I think it's pretty seismic. It's their first by-election win. Labour and Conservatives down. So I think it's been a very interesting, that first post-Trump set of UK elections, there was Conservative campaigning running on Make Doncaster Great Again, things like this, trying to ape the sort of, well, MAGA, that's not quite MAGA, is it? But but aping what Trump's success in the Midwest in, the old manufacturing red wall type heartlands, and doing it very successfully, and the Conservatives not doing it very successfully. You think Westminster is, local government can get very brutal. And seeing how they now govern and actually having their policies more under the spotlight, how that plays out. So it might be helpful, depending on how that goes for the larger parties.
I was going to say, I think it's interesting in that actually, if you've seen the Trump effect has actually had a chilling effect on the far right. If you look at the Canadian election and the Australian election, where Poilievre in Canada was way ahead in the polls and actually Mark Carney ended up winning, and the same thing is happening in Australia. There has been a general rejection of Trumpian principles off the back of what we've seen in the last, in his first 100 days. But actually, in places like this, it's to see that actually that trend hasn't borne through in a place like it's Doncaster, right?
Yeah, so I think so. Reform have downplayed the Trump angle, whereas you can see from that campaign the Conservatives tried to use it.
Mads, what slightly Trump-esque, tariff-esque, there's been some other actions happening. What's going on over there?
Yeah, of course. Everybody's looking out for the economic and sort of direct impacts of the trade war and of the tariffs. And we can already see a very meaningful impact on U.S. trade. When you look at China, so China accounts for roughly 9% of total U.S. trade. So it's not everything, but it's a meaningful quantum. And depending on how you measure, kind of what time series you use, the China-U.S. container volume is already down between 25 and 45%. Now, that's been partially, but not fully offset by traffic from elsewhere, for example, Vietnam. So a lot of imports are simply delayed. People are hoping that something will be worked out. And indeed, we've seen that Trump was quite quick to fold on electronics. He had a call with Tim Cook over at Apple, who said, listen, iPhone problem. So electronics have been exempted. The big question, of course, is what do we think will happen? Will Trump stay the course, or will he continue to fold? He's already delayed some of the reciprocal tariffs with the rest of the world. We know they've been stayed for 90 days. We know that electronics have been exempted for the immediate period, although they've sort of warned that they will come back. My guess is that he will not sustain a 145% China tariff. The economic pain will be too high. There'll just be too much inflation coming out of it. And the truth is that China is unlikely to buckle under pressure. There is a high degree of pride, and there's no desire to be bullied, and there's no democratic mechanism to force a change. I mean, this has had huge impact on Chinese manufacturing. You've had very, very severe impact in many regions where you have whole communities that live off making plastic nonsense and exporting it to the U.S. What will end up happening is eventually there will be some kind of face-saving deal where tariffs will be reduced, but they're unlikely to go back to where we were. And so if you sort of look at the net medium term, inflation will be higher than it would have otherwise been, and that will be a permanent drag on the U.S. economy. Apollo, the investment group, has already been out and forecasting recession by June of this year. That won't show up immediately.
Q1 was 0.3% down. What was?
Yes, but that is mainly driven by trade as opposed to domestic consumption. Actually, if you look at Q1, domestic consumption held up fairly well.
Yeah.
But
it's the offset figures, isn't it, Mads? It's because they include the import figures to offset GDP. Is that right?
Correct. So the expectation is that U.S. domestic consumption will take a hit in Q2. Now, you will have to have a couple of quarters of that before you can you'll formally declare a recession. But as I said, more and more people are expecting that by the middle of this year, the U.S. will be in sort of a de facto recession. So it seems to be where we are right now.
And then we're in that cheesy phrase of if America coughs, we catch a cold, right?
Yeah, yes. If America sneezes, the world catches a cold. Yeah.
Although Lomax, at least one be it large Euro player has moved to the States. I don't know if this is because of tariffs or this was already in the works. I don't know if you know what's happening at Heart Aerospace.
It's probably been in the works for a while because they raised this. This is a company called Heart Aerospace in Sweden, building hybrid or electric aeroplanes, who has announced this week that they're moving to LA, full lock, stock and barrel. So they're moving all of their operations there. And they raised a big 107 million Series B last year with quite a lot of US presence in that cap table. So I think that probably a lot of it's been...
That's
yeah, I mean, well, they actually officially said it was to get closer to investors, supply chain, and customers. There's a lot of actually US corporate aviation players that invested in that company. But I think that this grabbed some headlines this week because we've had a lot of positive European news trending in the last quarter.
Yes.
You know, Project Europe at the early stage, but also, you know,
and
lots
also
of
the inflows
sort
of cash.
inflows of cash
at the
Exactly, in the capital markets, and lots of big announcements from governments in Europe. But this is one that bucked the trend, so it grabbed news. And I think if you're in aerospace, for example, or space, it's a very, very compelling reasons to move to the US. This major problem with the lack of growth capital for this company's still pre-commercial, right? So if you're trying to raise the 50 million, 100 million, 150 million for a pre-commercial company, like deep tech company, it's much easier to do that in the US than it is in Europe. While Europe and US have roughly the same number of seed rounds, you have roughly 4 times the amount of rounds of a value of 20 to 100 million in the US. So this is a big kind of structural problem that Europe needs to fix.
I don't know whether Heart Aerospace's airplanes are good or not. I'm not close to the company.
Haven't even done their main prototype test flight yet. That's the due for this year. So you're still early. Yeah.
So the headlines we saw were that kind of they were talking about investors, yes, but also customers and partners.
Mm-hmm.
I mean, are they having more customer pull from U.S. airlines from Europe?
I don't necessarily disclose that, but if you look at some of the investors in the round, they were U.S. airlines in the way that European airlines weren't actually investing in that round. So I don't know. It's sort of funny because you would have thought that European airlines would be investing more heavily in this kind of critical future technology.
My point exactly. I mean, we keep talking about and actually bashing the aerospace industry and airlines in general for being carbon heavy and emissions heavy. And it seems that there is some homegrown technology here that could be part of the answer. And we couldn't find a way to place some advance orders on some of these flights to support a local champion. Look, the only reason Elon Musk could get SpaceX off the ground is because NASA went in and placed contracts and gave him business, and he then had to figure out how to make the rockets that could meet the price points. Why are we not doing something similar here if this is an important thing? We all talk about carbon emissions, and Europe being a leader in this space, we've got technology. Why are we not putting some orders in, being a customer?
It's a great point. Yeah.
It seems completely bonkers to me.
Look at Outsized Aerospace, right, which we talked about, had its first launch earlier this year. It took them, I think, 400 million of capital raised to get to that initial launch, right? It took SpaceX, I think, 100 million to get to an equivalent point. Largely, I think, due to what you're talking about, Mads. So I think it's something that needs to happen, as well as the equity funding environment as well from the venture side.
All right, Chris, data. Where's the money? Show us where the money is.
Just Lomax mentioned the sort of scale-up gap. We did an analysis last year at London Tech Week on, as you go up the funding scale, where the capital comes from or where the capital is based. Yeah, sub 1 million, it's 97% UK, and then I think as soon as you got especially above 20 million, it then takes over overseas, largely US. And by the time you get to mega deals, it's 90% US or overseas and US, and in life sciences, I think it was 100%. Qualified good news, on fundraising. So it's almost double from 2023 to 2024. So, and again, this is just from our venture members. We've got around 100 venture funds in the membership. It was about 4 billion in funds closed last year, which was up from 2.3 in 2023. And I think some of that is driven by some of the larger funds we saw close last year. But even if you take those out, it's still an increase. So it's been going down. Now it's going back up again. So that's good news. And we also saw the number increase of funds, closed and raised from 44 to 48. So again, there's a small increase there. I'll be interested to see a bit more in the data, because I'm getting a feeling that you're getting some very large funds and quite a few emerging smaller funds coming through, a lot in that data. So we need to see if that's something of a trend, which we certainly seen in the US as well. In terms of where UK VCs raise their money, 25% of it is domestic, the BBB by far being the largest LP in UK venture funds. The US has now, which really dropped from sort of 2021 to 2023, it was 2.6% of the total in 2023, is now back up to 13%. There's quite a lot of pension fund investment in there as part of that, which is good to see. On the UK pension side, from our data, then there are obviously more funds out there which weren't covered by this, but from our member funds, it was zero.
Yeah,
Pensions
no
was
surprise.
about 7.6% of the total, so 300-400 million of what our members raised. But yeah, all overseas, none UK. I mean, there has been, from the start of this year, we have actually seen from the Mansion House reforms, which again we'll get more into, but we have seen some deployments in our member funds through LTAFs. There's been some LTAFs launched late last year, which have already started deploying. They're not taking
Chris,
cornerstone
what's
checks.
an LTAF? Tell everyone
The
what an LTAF
long-term asset fund. So this was an investment vehicle set up a few years ago to kind of bridge that DC private markets bridge, which was basically non-existent, and it tries to bridge the two by making it feel like a product they're used to, but giving it the flexibility to do some closed-ended private market type funds as well.
Right.
I think there was some skepticism when it was launched that would this really work for private equity venture in particular. But we have seen some. This is a venture VC LTAF, and we've seen a few of those launched and seen some deployments. So Lakestar got 11 million euros through Aviva, Cambridge Innovation Capital, and a couple of others have small checks, top ups on existing funds by and large. But it's good to see that starting. So we obviously didn't see that last year, but we are starting to see that this year. So it was zero last year. It won't be this year.
Well, that's great. Well, I want to dig more into that in a second, because I know you've got some ideas on what's happening behind the scenes in pension reform. But I've been looking at some of the data sets. So I look at the Deal Room, PitchBook, and other data sets. They don't all quite marry. And here's some data from Global Data, which looks back at Q1 VC by value and volume. So the US value is up by 50% year on year to 38 billion, but volume is down slightly. And US deal share by value now at 58%. So they're still obviously the major player. No great surprise there. UK volume and value is down, but it's fairly steady as she goes. So I reckon about 13% down in value, about 4 billion. And China has fallen off a cliff on both metrics. So value down 50%, which is around $6.5 billion, and volume also down. So China has been hammered, just for some context, but also keeping in mind that every data set that I look at gives a slightly different figure for each metric. I look at the trends rather than the absolutes. The other thing that caught my eye this week was that Vinted are the re-commerce platform. So they're the resellers of mainly clothing. They've set up a VC arm, which I thought was kind of cool. So Vinted was born in 2008. It's Lithuanian. They do about 700 million in turnover, and they had at about a 10% margin. And they've set up Vinted Ventures to strategically invest in re-commerce and associated businesses. And that's from kind of pre-seed to A, so the kind of the 500 to like the 10 million euro mark. The other thing that caught my eye was Sam Altman. I don't know if everyone's seen, but ChatGPT 4.0 has apparently been quite sycophantic and annoying and a bit.
It's incredibly annoying. Oh my god, it's annoying. Yeah.
Last week, my responses were turning to Welsh because I'd run out of tokens, I think. So I was getting voice responses in Welsh, and what the. So that was quite. I haven't had any sycophantic stuff. Lomax, have you?
It's horrible. It's just congratulating me on the quality of every single prompt that I give it. It's nauseating. I mean, it's good for my ego in theory, but I don't know. After a while, it grates.
I saw the code response, so I think it's pretty much in play to be fixed. Mads, you wanted to talk about NATO. Have a quick chat about what's happening over in German startups?
Yeah, so a German startup called Ox Robotics, they have raised 31 million euros. It's an interesting company because they are actually developing combat robots, not of kind of Terminator style, but more like
That's where my head went. My head went straight to Arnie.
Absolutely, yeah. He would be a boon for any army, wouldn't he? No, I think it's sort of more vehicles that can drive around and serve a purpose on a battlefield. It could be both offensive and defensive. It's led by CEO Mark Whitfield. We've talked about what Germany's defense pivot means for startups. And here is exactly an early down payment on that. What's interesting is that the UK government has vowed to allocate a tenth of defense budgets to what they call quote unquote novel technologies like drones, like autonomous bots. And the chief executive of ARX, he has said that the startup will use some of its new funding to create production facilities in the UK. So I think there's some lovely European collaboration here. I think his central idea is that nobody will attack Europe when it's clear that they don't stand a chance of winning. And I think that's sort of the good old sort of, speak softly and walk with a big stick.
Was that FDR? Who said that?
Something like that. Now, it's entirely obvious that Europe can more than stand up to Russia if we invest. And I think this is part of how we do it. It's not with one company. We need hundreds of companies like Ox. But I thought it was an interesting sort of, sign of the trajectory and some of the new things that are happening.
And Lomax, you talking about war, you've been in war zone blackouts, shutters down, lights off, living in Portugal.
So we had the big blackout. We had the big blackout on Monday, which suddenly at 11:33 a.m. Lights went off, and my business partner and I were fiddling about with the fuse box in our office.
Fuse box, right?
Yeah, of course, and exactly. And I was getting my screwdriver out and all that kind of stuff.
and then you looked out the door and went,
down the straw, and everyone was looking out of their doors and trying to get their phones to work. So clearly what happened here also is that, we lost power from 11:30 to roughly 9:30 p.m. That's the whole of Portugal, the whole of Spain and parts of southwest France, 55 million households affected. It is nuts. I mean, these things have happened before. There was a big blackout in 2003 in the East Coast in the US, roughly affecting a similar number of households.
And we had blackouts a lot, and there's a lot more now, but the mobile phone network never went down. I don't know how they kept it up, but you lost everything, right?
And the problem is, if you live in Cape Town, you'd probably have a generator, right? Because you'd expect it to happen, because especially now they have blackouts the whole time. Here, you don't expect that, so you don't have a generator. So the couple of things that I've learned is, one of all, you should have gas to cook on at home, right?
Yeah.
And otherwise, you're just eating biscuits and crisps with the kids, which they love.
They love
great.
It.
Yeah. Mobile phones go down, so you do realize how reliant we are on the mobile phone. Otherwise, it was a lovely experience. I got to know some of my neighbors who I hadn't met before, and it's kind of little echoes of COVID. I think on a serious note, just digging into it a little bit, people don't, there's lots of conspiracy theories. Was it cyber? Was it Russia? Et cetera, et cetera. I mean, we don't know yet. I mean, on that day, there's a really good article by Alex Chalmers, who writes a lot about tech, UK journalist, and very good article this week, suggesting that, and this has come from other people as well, that as we've moved to a more renewable source for our electricity generation, this causes problems with the infrastructure, the grid that we have is not used to that, and therefore needs to go through an upgrade or a refitting to be fit for purpose for intermittent, electricity generation from, for example, solar and wind. What's interesting, he said in that article that there is a way, so if you're going to rely more and more on, nuclear doesn't have this problem, by the way, if you're going to rely more and more in wind and solar, you need to, which rely on inverters to invert the electricity to put it into the right current AC for the grid. But what's interesting is, if you're going to start relying more on wind and solar, you need to fix this problem. Interestingly, in the UK, there is a technology which is called synchronous condenser, which the UK has invested in one, which for 25 million covers 1% of the inertial requirements for the UK. So actually, to fix this problem, it's not a massive investment, 2.5 billion to fix this, to make this problem go away in the UK. But clearly that is something, as we transit to more and more renewable sources, which are intermittent, so wind and solar, unlike nuclear, which is base load, you are going to have potentially these problems.
60%?
Yes.
The UK's fairly high.
It obviously varies, but yes, very high. Yeah.
For the one day a year that we get sunshine, I think.
Well, I know. And Portugal and Spain in the summer is 100% this, right? So this is going to become potentially, obviously the anti-net zero brigade are having an absolute field day with this. But I just see it as a part of an evolution. We spent the last 100 years relying on coal and gas-fired power stations. We're now moving to clean energy. The whole infrastructure and grid needs to be right-sized and upgraded to reflect that. But this is clearly a major problem. Like, to lose a whole economy for a day, it suggested that, you know, the Spanish economy will lose 0.3% of economy growth, right, just from that one day, which seems crazy. But don't forget, Spain's one of the fastest growing economies in Europe at the moment.
So if you're in startup, get into microgeneration, get into batteries, into any form of fault tolerance in the energy brigade. And I think you'll probably have a market for the next 10 years.
Complex startups, capital intensive, but it goes back to battery. We're going to need a lot of battery storage if we're going to rely on this type of technology.
So Chris, I want to bounce back to you, and I want you to tell us all of the secrets that you're not allowed to tell us. Everything that's going on, BVCA, government, behind the scenes, pension reform, what's happening, because you've just recently launched, I think it was a couple of weeks ago, wasn't it, the Pensions and Private Capital Expert Panel Final Report. Everything you can share. Maybe start with a little history of you and the BVCA, so a bit of context, and then the initiatives that you think are the most exciting and how they're going to affect venture capital, and then obviously roll downhill into startups.
Sure. So just my background, I've been at the BVCA 9 years, and I always know that because I joined the day before Brexit, so whatever that date was in May, which is coming up, will be my 9-year anniversary. We're a sort of broad church organisation in terms of private capital. You know, we've got big private credit funds, private equity funds, all the way down to, you know, the big VC funds to micros or first-time funds as well. So you know, I think recognising that obviously within that broad area of venture as well, there's quite a lot of policy and political engagement to do, you know, specifically for venture, and making sure that is all has a distinct voice and is understood in government. So
how many VC firms are there in the UK?
So if you, in terms of how many are investing, there's hundreds. If you take all the overseas investors that are here, in terms of UK based,
I guess it's hard to delineate completely. We counted around 400 in 2022. We counted around 400, but you're right. I don't know what was originally, you know, whatever, US or Chinese or whatever.
I think if UK funds, it's more like 300. It might have been 400 in 2022, and now it's might have been some churn, shall we say?
And that's managers. That's number of managers, right? Not number of funds.
Yes, not number of funds. Sorry,
firms.
Yeah,
firms. That's right. Yeah, so firms. So around 300 firms. Okay.
So my job is to represent them to government, but also ensure that, you know, the UK is the best place to raise, manage a fund on a sort of technical side as well. So, you know, I work from the political side, but also talking to civil servants, regulators, etc. Just sort of either saying, you know, this bit of regulation doesn't work, can you fix it, or, you know, something more bigger, and this is where you need to deploy a lot of capital through the BBB or whatever. So, you know, it's great talking to VCs, and, you know, quite often their attitude is, can't we just get rid of all this regulation? Can't we just, you know, this is just ridiculous, you know.
Doesn't sound like a VC at all. I don't know what you're talking about.
So, you know, and I think over the time I've been at the BVCA, our VC membership and VC itself has grown in those 9 years massively. I'm very encouraged to see more and more VCs getting involved at that level and being on, you know, the government's Council for Science and Technology. Now, there's now always spaces for VCs. So over those 9 years, the level of interest, the level of expertise we have has really taken off. So it's been really positive to see, with obviously where the gaps are and where where we need to do more. Obviously, we've already touched on some of those already. Scale up gap, the, you know, US pull. How take advantage of the fact we have one of the best university ecosystems in the world, and how do we kind of, you know, how do we double down on that and actually get some economic benefit and not going elsewhere? And then things on, you know, how we raise our money. Obviously, there's EIS and VCT, which is good on the sort of retail side, but then on the institutions, growth capital on the sort of later stage, pensions is a sort of central part of that. So I'm happy to sort of go into that one first, and then maybe cover some of the other areas.
Yeah, first up, can you put the UK in context for us? So we talked about how many number of VCs. We talked a little bit about deal value. Where do we fit in Europe, especially? Because all the data that I look at suggests that the UK is still number one by quite some distance. But how would you put the UK in context with Europe and then the rest of the world?
So the government's favourite stat is third largest, bigger than France and Germany combined, just about, I think, these days. I mean, I'm always obviously trying to bang the drum for UK venture, but I still see myself as a European and want us to all be joined up along those lines as well, of course. But yeah, I mean, Brexit has created so many anomalies because obviously the fund managers are here, but they're quite often structured in Luxembourg or anything else. So you have all these slightly sort of strange sounding fund structures and things driven by all of this. So yeah, but in terms of the amount of investment, the actual industry people represented here and all the advisors and everything else on top of that, I mean, we publish every year just the economic impact of not the investments we make, but the industry itself across venture capital and private equity supports around 140,000 people. So not inconsiderable. So as a venture capital or a private capital ecosystem, we're a big player.
Can I ask you a technical question, which is that if a lot of VC funds in Europe and the UK are based in Luxembourg, that's because a lot of institutional limited partners who invest in funds are very used to and like to invest in Luxembourg for various reasons. It's the gold standard. If you have a UK manager who raises a big fund in Luxembourg and then deploys 80% of that capital, let's say into the UK, because that's where their network is, it's, the biggest market in Europe, etc. How is that booked in terms of the numbers that you talk about? Is that deemed to be a European fund because it's a European registered fund, or how does that work? Is that just all taken into account and we shouldn't worry about anomalies in the data?
So we have, my research team will probably tell me I got this wrong, but we have, and we work with Invest Europe and others on a European data collective. So all of the data for Europe is shared across all jurisdictions. So I think we understand where, but if we take it as an FCA registered UK fund, they might have structured it through a Luxembourg holding company or whatever, it will still be registered as a UK fund that's, because you're raising capital here, obviously the investment coming here as well, that 80% was still registered in the UK. So
we're not missing it from the data. I see.
No, okay. No. So because we have the full European picture through that platform, we can pick it all up.
It is very blurry. I mean, 40% of capital raised by European startups comes from outside of Europe. They're quite blurry. It must be really, really hard for you and your research team to work out what's going where and how that network of cash actually operates. Chris, what initiatives? I know we've seen, I mean, I'm going back almost beyond Jeremy Hunt and prior. We've seen a number of government initiatives that have never really got any teeth. But what have you seen behind the scenes that you think is going to work? And then at some point, I really want to talk about the pension reforms and the latest report and what's happening with Mansion House. But what other initiatives, or what is the total kind of pot of initiatives that are going to support our ecosystem?
I mean, there are many, especially at the very early stage. I mean, we've got Innovate UK, UKRI, various pots of money.
So they're the grants, right? That's the grant side of it.
Sort of underpinning everything. You have EIS VCT, so tax advantaged schemes sort of driving a lot of investment, and
EIS is staying for a while, isn't it? I mean, there were lots of noises of old, but EIS is baked in for a while, right?
So the sunset clause, so baked into when we were in the EU, anything that required sort of state aid approval had a 10-year sort of time horizon baked into it, the sunset clause. So that was renewed last year for another 10 years. So the tax rates get through EIS and VCT are remaining till 2034, which is good. The government in the spring statement, the Chancellor did say that they would host a series of roundtables, which we're going to join later this month, on potentially looking at some of the limits on the schemes which haven't gone up. With inflation over a number of years, so there's scope there, and I'm working with other trade bodies, who look after, because EIS isn't just funds, it's also individual, the investors themselves and angels and everything else, about sort of proposals we can put together to make some. We're not asking them to sort of completely take all the limits off, but where there are some anomalies, especially from state aid and other areas, to make them a bit more generous to help allow that journey along EIS and VCT to kind of go a bit further, so and more supportive to founders, which is good. I guess that the largest interface the government has is through the British Business Bank. It's now, earlier this year, people will be familiar with Patient Capital, British Business Investments, the various arms of the BBB. It's been brought under the BBB umbrella. The BBB is, the programs are the same, but it's now just British Business Bank. And as I said, in our data, they are the single largest LP. So you have in venture funds, you have the Enterprise Capital Fund Program, which is a really good, I believe, SuperSeed are among those.
Yep.
Which is and it's a really, you look at even when the BBB publish their data on the returns data, it's a really successful program in terms of crowding in LP money, picking good managers. It's been phenomenally successful, and it's a program that's been around for over 10 years and cornerstoned a lot of those funds which are now very well established in the UK started off as ECFs quite a while ago. So there's that, and then there's what were the British Patient Capital and BBI programs. You've got fund of fund programs and investments in larger funds. Again, are hoping to get some. British Business Bank is amazing. People sometimes say it's a bit slow or a bit bureaucratic, but it is a government arm. It's taxpayer money, so
yes,
they take their time, and that's to be understood. But it does unlock additional private capital from the UK and elsewhere, which is why it's so important and why it's still so needed. And there are very few UK LPs who will make a cornerstone investment in VC funds. They have to find it from elsewhere, usually in Europe or the US, and then then they're no longer UK and they're moving elsewhere. So just allowing that sort of pipeline to sort of fix the gaps is something we're also pushing for and hopeful to get. So those are the main government programs, and they are. It's encouraging to see through the last government and the current one that they are ring fencing money for tech and venture. So in the defence space, you've got.
It feels like that. It feels like it's more than lip service, but I don't know what you're seeing from the inside. Are these embellishments and kind of augmentations to these schemes going to happen? Is the pension reform going to happen? Maybe we can start talking about the report and the feedback.
Yes. So I think where there's just one final area where I think the government now has established something quite useful is the NSIF, the National Security Strategic Investment Fund, which is sort of government CVC arm, copied on what they do in the States, and that's been very successful. They've ring-fenced £400 million for defence. So again,
and this is resilience, defence, cyber, all those things that Trump has basically made front and centre for the UK and for Europe.
Indeed. So the fact that defence spending is going up massively, but having that ring fence there and saying we want procurement processes to be much, there's been something like 4 companies who've largely dominated tech defence, but actually getting tech, drones, all these sorts of things as part of that. So that's very encouraging. Pensions, pensions is one of those things where me and colleagues of mine have been, chipping away at it for years. I'll give credit to my colleague, Tom Taylor, who did some really good work on this 5 years ago on the Productive Finance Working Group, which was, not a very well-known Bank of England working group, which just sort of looked at this problem and said, why aren't UK pensions now deploying in private equity, venture capital, everything else? And basically gave a good set of recommendations as well, background as to why it is and what the recommendations are. Essentially, what the government put in was a charge cap on the fees that DC schemes could invest in products that couldn't go above that cap, which was at 75 basis points. So the government, when it was Boris Johnson was Prime Minister, actually, but I think it was more Rishi Sunak when he was Chancellor, published a letter back in 2021 saying they intended to change that charge cap, and there was a consultation on the charge cap itself. The charge cap didn't go, but it's now blended, so you can have a balanced strategy with private markets as long as you average out at 0.75%. You can. So prior to that, there was no point having the conversation. There's no point us going to pension schemes saying invest in our members because that charge cap was there.
And the context there, I guess, is that if they're saying the cap is 0.75% fee annually, it's market standard within venture for venture managers to charge 2% on the funds managed per year. So there's a massive mismatch. I guess if you're saying now, if 0.75 is blended across everything, because they're probably playing 25 basis points on some of their public markets funds. So maybe it can be blended, but I can see how that's a big barrier until that's reformed.
And when they made those reforms, it did mean we could then start the conversation. And then Mansion House effectively happened off the back of that 2 years ago, once those reforms came through, because then...
So, Chris, just remind everyone what Mansion House is and what it was set up to do.
Every year we elect a Lord Mayor and there's a big Lord Mayor show, but because they are right in the heart of the City of London, they have the Chancellor. He traditionally gives a speech there, and that has always been the case, and it's usually more of a sort of dry kind of economic speech. But this one that the previous Chancellor, Jeremy Hunt, gave was about pension reform and actually having a Mansion House Compact, which came out of that, where I think it was 9 of the largest pension schemes in the UK said they would put 5% of their underlying pension assets into private markets. I mean, you could see coming out of that the lack, the lack of understanding. I mean, on both sides really, because they called it unlisted equities, which we were like, I mean, that's a strange phrase to us when we're, But that's because, as I said, before that they've just been going, lower fee, completely liquid type, low risk products for 30 years. That's what we've been told to go. Now we're saying turn the oil tank around.
For context, that's still sorry to interrupt. For context, still a very, very low bar, because if you look at most, portfolios, take the US for example, and some defined benefit schemes in the UK, which have had a kind of longer history of building their strategies, Most of those, they have a 20 to 25% allocation to privates, right? Which it's not just venture. I mean, venture capital will be a very small portion of that, but that will be private equity, infrastructure, etc. So actually just saying 5% in privates is a very, very low. I mean, we've got to start somewhere, I guess.
Yes, and I think we're expecting another Mansion House speech later this year, and there's been some leaks to the press that that figure is going to increase, and that's good. I think for us, we want to make sure that the original Mansion House announcement did have a real focus on venture growth, innovative companies, high growth companies, and we want to make sure that's still very much the focus, because we haven't we made a lot of progress. I don't think we've sorted it entirely yet. I sat down with some people in Treasury and we said, okay, how do we turbocharge the venture and growth aspect of that unlisted equities, private markets bit of this, right? Because this, we'd spoken to the Australian superannuation funds, and they'd been on a similar journey 10, 15 years ago. I mean, slightly different type of funds, but they had also been, asked to do more private market investing, and they'd started with big infrastructure, private equity, and it probably took them a few years, probably a decade, to get to develop a venture strategy as part of that, as their sort of private markets portfolio. So obviously, if that process happens in the UK, it's not going to get to the far high growth bit of the economy the government wants it to go to. So I sat down with Treasury and we came up with the investment compact for venture capital and growth equity, which was basically asking our members and even the wider VC and growth fund industry to sign up to a compact to say, and alongside the Mansion House Compact, to say this is the private capital fund managers coming in saying we are happy to enter the dialogue to make this work and bridge that massive knowledge gap that existed 2 years ago. And we got over 100 signatories on there from very large, well-known funds and many others. And it was included in the documents for the budget in 2023. The government really got behind it. We had the Chancellor sort of speak at one of our events talking about the compact. So it had a lot of momentum behind it. We've produced two reports over that time, and a lot of on the technical side, the whole focus was on cost. And there have been changes to the value for money framework to then look at, okay, what's the actual return? What's the value for money in terms of the cost versus the return? And then, we've had, as I mentioned earlier, LTAFs, these new products. And I think when Jeremy Hunt set this up, he was very much like, I've given you the framework. Now, private industry, go off and find the solutions to make this work. And I said there's been some progress there, and we are starting to see. I think in our data, in the sort of growth private equity side, there is a bit more pension investment. So it still hasn't worked its way down to venture yet in that regard.
I guess the challenge, Chris, is urgency. So we have this little thing called AI happening, and I know that being a VC, I'm going to have a very particular viewpoint. And I know there's no urgency, for the Mansion House 9 or whatever that's going to become to make this happen tomorrow. But I need to get old Jerry Maguire on you and go, show me the money. How, where, when is this going to? What are the mechanics? How are we going to see this? What is going to happen?
Yeah. So yeah, no, you're right. And it was partly my fault for drumming up all the interest in getting all these VCs to sign up to this compact. And now they're like, okay, come on. So no, I completely agree. So I think one of the positives we had from our expert panel final report, which had, as I said, the pensions providers on it and the recommendations in there, because now with the Labour government, I think they're a bit more pro, being a bit more interventionist. That's more that they're happy to kind of step in and bring the big arm of government to try and help unlock this a bit faster. So in there we had some big recommendations. We essentially had something which was largely copied across from the French Tibi scheme. A very quick background of that is Professor Tibi in France got together with Macron and created this scheme where Macron eventually went round and told all the big institutions in France, can you invest through the scheme? And it's unlocked something like 20 billion euros into French, not just venture,
doing
but
it
tech,
well.
private equity.
The French are doing it well.
Exactly, in a very French way. And kind of, I think we're usually a bit more reticent to sort of do that sort of thing. So we've called it the Nova scheme. I think I came up with a name for that, which was New Opportunities for Venture and Growth Acceleration, which I thought someone would come up with a better name, but it hasn't, so it's stuck. But, I think now it's nice because for the last couple of years we've been saying we need a UK Tibi, you need a UK Tibi, and now the conversation is, Nova. How do we make Nova work? So sort of copying the lessons from Tibi. I mean, again, that will, given where we are with DC schemes, that might take a couple of years to set up, because it's essentially a kind of accreditation scheme, run by the BBB or the government and others to kind of try and just help, get the matchmaking process going a bit faster. So that it has been happening, but just speeding up the process, but also kind of front loading that in order to get the money for you, Dan, and others faster through a fund of funds, sort of cornerstone by the government, because the British Business Bank has a British Growth Partnership where they do have some pension money. They're going to invest more direct to start with. Again, I think largely because of that fee issue. That's a good thing. They're going to be investing directly. So, but in order to get a fund of funds, have the government cornerstone and invest in it, it could have some kind of, like I mentioned earlier, ECF arrangement where you can bring in the pension funds by the government taking more of the risk or paying more of the fee or whatever to get around some of those issues. The pension money that will coming in will be more local government pension schemes and others like that, they are sort of DB type arrangements that don't have all of the issues you have with DC schemes, which still take a while to unpack around fees and everything else.
When Chris, how much, where?
So front ending with the fund of funds, you could reasonably do that in a year, I think.
Okay.
So anyway, these are our proposals, and I think we need to keep on to the government with that. Say, obviously, they're looking for growth. Yeah, I mean, it's both the growth and the retirement outcomes, which in the UK...
I feel for Labour, because if Labour do all these great initiatives and support, and they're not going to see any of the benefits of this if they're out in 3 years' time, right? I mean, this is something that's future proofing the UK, and I always fear for this 4-year mandate for MPs, where they're not going to get any of the upside of this at all.
When you're looking to that 4-year horizon, which is why we have a sort of lack of long-term planning, which has been a bit of an issue in the UK. But I think something with that fund of funds, it's obviously not going to turn the dial up massively in terms of underlying sort of GDP and everything else and growth. Well, but it'll have a small effect. It will help sort of turbocharge that process. So the UK pension schemes used to invest massively in UK public markets. It used to invest something like 20%, and now it's very, very, very low.
Is it 5?
So change, it's something like that. So change. So I mean, I do feel a bit sorry for some of the pension schemes when you're going to see one who's like, sorry, where do you want me to put my money today? They're getting it from all angles, kind of thing. We now have a new pensions minister, Torsten Bell, who's talking quite bullishly on this. This agenda is going to stay, and they're looking to do a lot more. So I mean, in terms of we are seeing some deployment in VC, which is good, and we've put forward the ideas to turbocharge. It
started. There's more to come. What I'm hearing is we still need some time.
Yes, unfortunately. But
it's going to take time. Although, Chris, I would just challenge you on one thing, sorry, just to say, is like, surely the whole point of this is that it actually does move the needle at the GDP level, right? I mean, it really does. Like, if we're saying that the investment in technology and venture into technology is a critical thing for future-proofing, for example, the UK, like, it isn't actually the whole point of this that it does move the needle at that level.
But it's not just GDP, Lomax. I mean, this is employment, this is innovation,
which is all tied into that. That's a sort of net output of that. But yes.
I think it will. So when I said, I was just talking about the fund of funds to set up in the next year on that level. But you're right. But then in terms of the GDP level, you need the public markets and everything else. It needs to be much wider than just what I'm talking about in the sort of venture area.
Mads, you've been very quiet, and I've not been able to bring you in because this has been super, super interesting. You've got some other thoughts and notes on this. What would you like to discuss?
Just a question for Chris, really. I mean, some really interesting headlines that have been out in the press recently sort of saying, look, Torsten Bell and Reeves are ready to legislate if they need to. So question for you, Chris, what do you think will happen here if you're if you put your gambling hat on? Is the industry going to figure this out by themselves, or are we going to need to see legislation to make it happen?
Yeah, I mean, I can't speak for what they will do, but I think last year, because now the UK pension schemes have to publish what they're allocating to private markets and everything else. And obviously that 5% target last year was 0.36%. So I think government understands that they're going to need
by
to
2030, isn't it, Chris? It wasn't a pledge by 2030? Yeah.
2030. But to go from 0.36 to 5%, the 50...
36 versus 25% as you would have as normal in, for example, the US. It's pretty crazy now.
Yeah. So I think we'll see those figures increase as we've seen in the press. But yeah, I mean, I think there is a lot of debate around mandation. Always, we thought that shouldn't be required, and plus mandation might get some bad outcomes, right? Because if we say, you have to put 0% whatever into venture or whatever, they might just think, okay, I'll just put it over there and forget about it. I want them to be upskilled to understand venture and private markets themselves, so that they do it and willingly, and take it seriously, build up the teams, and invest like other LPs, and really drive the finding the best managers and driving the returns for their pension savers. So yeah, I mean, I think that's a useful sort of stick to have behind your back to try and drive this forward. But yeah, I don't think it will be that sort of full mandation yet, and how you structure that.
It feels like the fee structure is the challenge, because venture capital has been an extremely lucrative asset class for many, many years. Obviously problematic, sure, but it feels like it's the fee structure that is the main education and fee. Is that fair?
And
Chris?
liquidity, right? You have rules and liquidity, right? That make it very, very hard for those funds to invest in venture funds. Yeah.
When we started on this, we kind of realized it's kind of everything. If you're creating an LP for venture, scale, they want daily liquidity, daily pricing, closed-ended venture funds is difficult as you can get.
And if I can then go, look, that's really difficult. This US public market stuff is really easy. I mean, what are you going to do? You're just going to take the easy option, I guess.
But I think from the work we've done and what the government has done, I think we've solved most of those, but the fees is still the main blocker, certainly.
Where's the answer? What's the answer to the fee structure?
I think that, like I said, it's either you either get creative on the government side. But someone else has suggested this to me, but I sort of nicked it. Was if the government said, not mandate it, but said if all the pension providers had to get behind this private markets program like a Nova scheme, they would then, because the problem is that a lot of them are, if they say if we did a massive private markets program, underlying fee costs to our members will go up, so we'll be less competitive, which is part of the problem, right? There's also the kind of consumer element to all of this as well, which needs to be understood. That's why another reason why the fees are so low. So, no one's going to step out and start doing private markets in a massive way if they then become, less competitive to the other pension providers. But if you get them all to do it, all of their fees will go up, and then they can all charge the higher fees. So that's one solution. But there are other suggestions about how you get around it. I mean, I guess ultimately it's us to make the case to say these fees are worth it because the returns are good.
That data has been available for decades.
But just making them aware of it, really driving that home. Yeah.
I don't think the stick works. I think you need three things here. I think you need you need to create the permissions. You need to actually loosen the legal system to make sure, and the rules and regs to make this happen. That's exactly what happened in the US in the 70s, right? They changed the law in 1978 to make it easier. I think pension investment in US venture went from, say, 1 billion to 2 to 300 billion, to the point where it's now 20 to 25% of the total sort of AUM of US venture. And for context, European venture, roughly 5% is pension funds. So if we're talking about unlocking more capital into our industry to drive more innovation, sort of taking the pensions from 5% constituent part to 20 to 25% is absolutely critical. But I'm not sure, Mads, I love your thinking that get the stick out, or your question, but I don't think the stick works. I think you need to, first of all, get rid of the hurdles. Secondly, you need to upskill. You need people who actually understand how to buy this product. I think it's quite difficult to invest in venture funds. I don't think a lot of people in pension funds really have that skill set. So really invest in the education and demystify the product. Thirdly, to be honest, performance. I could always go, we should all do better, but we need to perform. For example, we're not competing just against, we talk about competing against US venture, which, depending on what metrics you use, Europe is nearly there, certainly not in the top 10 percentile of funds, potentially on a pooled basis, but we need to compete against other assets. Private equity. If you look at European private equity versus European VC only slightly outperforms that, right? And if you look at the sort of problems you have with higher, less liquidity that you have with venture, for example, then that's the third piece of the puzzle, is both having the performance and showing and being seen to have that performance. I think is critical.
I think private equity has been far more innovative in terms of how it's structured, how it gives returns to its investors. As you say, pension schemes looking at that, I think venture needs to innovate as an asset class in order to unlock some of this pension money, I think. So yeah, we'll see how that plays out as well.
Mads, any other final thoughts before I let Chris off the hook?
No, I think it's clear that there's a lot to do. I don't know that if it's obvious that regulation and changes to regulation won't be valuable or needed or can work. I absolutely think they could. And I think it's Chris, you're right. We need to provide a good product to investors. They need to be open to having a conversation about what they want and what they want to see. And I don't know whether you have a lot of pension funds reaching out to you, sort of saying, look, if only you can structure it like X, Y, and Z, it'll work well for us. Like if the starting point is you got to cut the kind of the, let's just say, admin fee from 2% down to, I don't know, whatever, 0.5%. Well, that's obviously a non-starter, not because anybody's making, growing fat off management fees, but because it's extremely expensive to run VC firms, right? Finding companies, working with founders, supporting them, helping them. Like it's a completely different model from sitting at your Bloomberg terminal and placing bets into public markets. So it takes, more resource and that costs money. That's hopefully also what will give the outperformance that you can point to in the data you have. So I think everybody's going to give something. It does feel like we need to move a bit faster. My sense is that, we may need some regulation for this to move. And you could think about some schemes quite easily, right? If the target is 5% and the industry on average is on 0.3, well, you put a levy on anybody who's a laggard on that leaderboard, right? So if you hit your 5%, you pay nothing. And if you hit 0.3%, there's going to be some costs. You're going to have to fund something somewhere else to make up for that shortfall. I mean, economic incentives, I think, could be part of solving this if folks don't figure it out by themselves. I hope they will, but it's moving very slowly, it seems. And as Dan is saying, we are right now, AI is happening right now. We don't have 3-4 years to sit around and figure this out.
Yeah.
The capital is required right now.
You also need to potentially put qualifiers on geography as well, which I think is what Rachel Reeves has been saying. Well, allocate to privates. Okay, well, private equity, infrastructure, VC. What about, does it have to be in the UK? What about going to the US and investing in US VC funds, for example? So they might need to layer that in as well. Trade war kind of tariff, like UK-US trade deal, if we're, forcing our pension funds to only invest in, for example, UK venture funds, that it all gets in the mix of that kind of more geopolitical relationship.
Goodness. I feel like we've only just scratched the absolute surface of this, Chris. It's a fascinating topic. Just to close this one off, what should VCs do? What should LPs do? What should pension companies do? What is the next step?
So I think just from a BVCA level, I mean, the expert panels finished, so its final report has been published, but that will continue in some kind of new form. So get involved in that. As I said, you can sign up to our compact if you haven't done so, because we run a pensions private capital events. We do one at our summit, which is bringing pensions and not just venture but also private equity funds together. So there's that. But then I think just you will see that there are now several venture focused LTAFs that have been launched, and they're coming. A couple of them are coming to our event. One of them is coming to our event next week. He's like, I just want to meet venture funds. So they're now being set up, and they're there, and they have money to deploy that they've been given.
More being set up.
I hope so. I mean, it's the Aviva, LNG, Phoenix, and others at the moment, and there are some smaller players as well. I'm hopeful to see more set up throughout this year. I mean, they're being launched every week, but there are ones focused on climate, ESG, infrastructure, private equity, but there are a good number of VC focused ones. So I think you just need to Google it, find who they are, and I think they'll and they'll have very different strategies as well. So just identifying the right ones.
Who's doing this well in Europe? Who can we copy their schemes? Who's doing this well?
Well, we're already suggesting that we copy the French, the Tibi scheme. But in terms of pension, I mean, State of European Tech report shows pretty low across Europe. There are some of the Nordic countries are pretty good.
I was going to say, Chris, when I read one of the reports that we covered recently, I think it was the PitchBook report, said that in the top, or TechNation report, the top 10 LPs in UK venture last year, one of the top 10, it was the usual people of British Business Bank, etc. One of the top 10 was like the Norwegian State Pension Fund. It was the only pension fund in there. No UK pension funds.
They've got more money than God. So
well, it's not their sovereign wealth fund. It's their pension fund, which is, okay, fine. But yes, they have a lot of money, sure.
I think in the 2023 data, we said there was there's a stat that we usually use every year, and it was something like, that year, Swedish pension funds invested 5-6 times more than UK ones did. So I think that they are a good model.
And Netherlands have a lot of pension money, right? And they're really trying to get that unlocked now at the moment. That's another place of interest.
There have been similar to sort of Mansion House and previously Tibi. I know Denmark Germany has its WIN initiative. There are several initiatives coming up like this now.
Italy's waking up as well. I've seen a lot of Italian pension and government money starting to be talked about. I don't know what the reality is, but it sounds like my sense is there's some Italian moves afoot. Right, we have gone way over time, and I love you all dearly. Mads, I want to do a quick AI corner and then your deal of the week, if you're up for that.
Yeah, so AI corner, I mean, there will continue to be lots and lots of news on the AI side, but I thought really the highlights or headlines over the last few weeks were that Satya Nadella, he now says that 20 to 30% of all code at Microsoft is AI generated. Sundar from Google says that 30% of all code is AI generated. The Cursor team, that we know, that amazing developer framework, they now say they've generated more than 1 billion lines of code every day through the app. It's just a staggering number. So it's happening, folks, right?
We've only just started, right?
It's coming.
We've only just begun.
We've only just begun, which is super, super exciting. And so just switching quickly to deal of the week. I mean, we normally talk about tech deals, but I think there's sort of another deal that's been overshadowing everything here, which is this U.S. Ukraine minerals deal that Trump finally believes he has clinched. First, maybe unpack some of the gremlins a bit here. Ukraine effectively cedes 50% of future resource revenues to this joint fund that's being set up, and there are no security guarantees built into the agreement. That was sort of a red line for
Isn't it
Trump.
implicit though, Mads? I always figure it's implicit because a lot of these minerals are in eastern Ukraine. So if they're going to set up, if there's going to be any kind of reformation, rebuild, mining companies, it's going to be, that's going to be a very, very tricky one for Trump and Putin.
Well, not only that. So this is kind of where we come to what I think were some of the wins, some of the quite clever negotiation here from Zelensky. Trump, he'd previously insisted that all past U.S. support should count towards investment under the deal. And Trump, he believes that that's $350 billion. I think most of the rest of the world thinks it's closer to $100 billion, but whatever it is, it's a big number. And what Zelensky effectively managed to do was to carve all of that out of the deal. So that means that the only thing that will be counted as U.S. investment under the deal is future U.S. support, which means that for this deal to have any value for the U.S. effectively needs to keep supporting Ukraine. So it seems like a major win on Zelensky's part. But I think it's just interesting. I mean, they had this breakthrough, this conversation in the Vatican. And I actually think Zelensky, he's done some clever negotiation here. So yeah, that's deal of the week for me.
Wonderful. Lomax, quick deal of the week from you?
A more down the fairway deal of the week in some respects. So Series A led by Index in defense. I think it's interesting, just as I mentioned before, defense has been growing as a category. Now we're seeing, Index was
every
traditionally
deal of the
a
week
big...
isn't defense. I'll be very, very surprised.
Well, yeah, but I guess this is the thing. It's like when you start to see the big generalist funds, Index invests across everywhere in technology, apart from traditionally, some deep tech companies. They're now investing in defense. And so it's a sign of the times. It's a Series A, UK software companies, pre-seed led by a couple of friends of ours at Creative Fund and Concept Ventures. And yeah, interesting to see. And, it's a sign of the times for sure.
Wonderful, wonderful. I've kept you all too long. Chris, what's happening for you this week? What's on your agenda? More government lobbying, more smart pension house reforms?
Yes, indeed. No, that never stops. Yeah, as I said, we've got our VC conference next Thursday, so making sure that we can put the minister on the spot and see what we can get out of them, and then I'm planning. I'm going on some shared parental leave in June, July, and August to spend some time with my young son. So getting ready.
Congrats.
For that, getting
Is
ready.
This new babies.
This is my second. So yes. So he's 8 months old, and I'll have him for the final 3 months before he goes to nursery and.
I'm not sure we're allowed to let you go. I think we're gonna have to wheel you into number.
What about
10.
the pension?
Come on.
Pension money.
Come on, Chris. We'll have to whip. Mads, what's happening for you this week?
Working on a new investment, hoping for a term sheet next week. All very exciting.
Awesome. Well, I'm on holiday, so I'm off on holiday, and then I'm joining Andrew, who's normally with us, and Lomax in Marrakesh. So that'll be some nice sunshine, although we've had loads in the UK recently. Wonderful, guys. Thank you so much for your time. Chris, thank you especially to you for giving us the inside track of everything that's about you and BVCA and pensions and all the good stuff. So wonderful. Catch you next time.